Good afternoon, everyone. We often hear that uncertainty is a signal to slow down. But in reality, some of the strongest investment outcomes are built in moments like these. While headlines focus on volatility, disciplined capital is leaning in. Welcome to our monthly series where we go beyond the headlines to unpack how capital is actually moving across the region. Today, we're focusing on investing through volatility, not just how to navigate uncertain markets, but how to identify where real opportunity exists. Joining us to lead this conversation is our founding partner at Shorooq, Shane Shin. Shane has been at the forefront of building multi-strategy investment platforms across venture, credit, and late and pre-IPO stages, and brings a very unique perspective on how investors should think about deploying capital in uncertain times. Shane, let's jump straight in. For investors and founders tuning in today who are navigating this environment, how do you think they should be thinking about the current market and where should they be focusing?
First of all, Tico, Nada, thank you for having me and a real pleasure to meet you all. I hope you are all staying safe. I personally feel very safe in the Dubai, but I hope everyone and your family and loved ones have been staying healthy and safe and sound. So this question, there are multiple elements to it, but I always want to divide. There's a fundamentals like revenue cost side, and there's a fundraising aspect as a startup. So let's talk about one by one. On the fundamental side, first, if you are in B2C, particularly on certain sectors that touch hospitality, real estate, to consumer element, it is absolutely right thing to be ultra conservative. I'm sure you have seen about 30 to 40% impact, if not more. And that is real. And let's assume that's gonna prolong. Why? We're still going through a little bit of uncertainty the next few weeks with all the US and the conflict. And also, we're going to see summer very soon. So consider the next 6 months, your B2C revenue might be substantially slowed down. If you're touching B2B, which Shorooq, we spend about 80% of our capital into B2B and about 20% into B2C. B2B, I think it's right thing to estimate your B2B clients are going to be far more conservative and slow down to make any big decisions. They're not going to be very excited to commit to CapEx spend or new software spend or new AI spend. So consider even the revenue will be slowed down. Hence, your cost, something you can control. Revenue you cannot control for the most part. But the B2C, B2B, the cost side you can control. There is, you should really be lean about cost and make sure you can control your destiny for the next many, many months. I'm not talking about 6 months. We're talking about at least a year. Lastly, but not least, on the fundraising, we have already talked to all the regional investors and also international investors who are interested about the Middle East. It is unfortunately true that international investors' interest in the Middle East has substantially slowed down. So let's not bank on it. I always want to emphasize we as a founders, we need to have a strategy, not gamble. Gambling or relying on international capital, relying on a fundraising is not a strategy. You need to have a strategy about your destiny, especially on the capital.
Got it. And I think, Shane, one thing that I want to address, I think it's a question that founders might have as they're currently raising, and I think it's a very common question that we've been receiving. Um, Currently, is investors still actively deploying in such environments? And maybe from what you see in the market, can you see a meaningful pullback from investors' appetite today compared to maybe a couple of months ago?
Yes, that's a great, great question. And I want to talk about one by one. First, let's define and I should go deep into what we define by the market. So I was really surprised by so many of my friends and partners around the globe actually still looping everything in the Middle East as just one country, one region. What we're here to tell you is Saudi, as you know, and UAE, Qatar, Egypt, Bahrain, Oman, Pakistan, every country is different. So we need to be experts on each country and also have a customized strategy on each. For example, Shorooq, we're actively still deploying in all markets, including the UAE, including Qatar, including Bahrain, of course, including Saudi. But we know Saudi, for example, has not been really affected by all this, what's going on. Actually, surprisingly, we already saw data from our companies like Club, Tamara, and so like. Saudi actually is flourishing. Saudi is actually flourishing on domestic consumption and also even on B2B businesses. UAE, unfortunately, have been impacted. So we are still actively deploying, but finding the right opportunities that can withstand and actually kind of overcome this to be stronger player. Egypt, of course, has not been affected by this. We're continuing to deploy. Bahrain, Qatar, we're also looking for the best opportunities that can overcome this as a stronger moment. Shorooq, we have multiple funds. We have an early stage fund, pre-IPO fund, global AI fund. So from our global AI fund, for example, we think this is the moment to be investing actively in the US, actively into Korea. Why? They have not been affected, and you probably saw in their S&P 500, top companies in the US are only doing great. AI is creating only more efficiency. So we're actually doubling down on those. So in short, we are deploying capital. I know a lot of our regional peers are still deploying capital. So there's nothing for you to be, in my view, worried about from the regional peers, but the bar is high and it is our job to convince them why we're the right company or the founder to receive your precious capital, because capital has always been precious and it will be even more precious.
Thanks for this, Shane. I think my follow-up question on that matter is if this is a market where you can get opportunities, really good opportunities in, how should investors think about pacing and deploying in uncertain times or uncertain markets? Is how does discipline actually look like in practice today?
Yes. So I always feel uh, in any volatility or risky environment, not deploying is the worst strategy. Over deploying might also be a bad strategy, but not deploying at all is a terrible strategy. If you actually study the 4 to 5 decades of investors who have been investing, actually always in the market makes it or break. You have to be always in the market. So Shorooq, that's our key strategy. We did that despite any cycle, be that COVID, be that any market, we've always been in the market. So just wanted to highlight that. We, in this market, of course, you need to be cautious and you need to build conviction at what opportunities are going to be great. For example, even before all this conflict happened with AI, some companies are thriving with lower cost, but some companies are still slow to adapt AI and still are, in my view, overhiring or operating with the pre-AI era. And that's not healthy. And especially in the current war conflict situation, that only became even worse. So ironically, some companies who already thinned out the cost with AI actually are not going to see so much impact from the current conflict. But if you are slow to adopt the AI, right now is the best time to actually be forced to adopt and actually change and actually, let's say, overcome this turbulent moment.
And we'll cover AI a little bit more during our talk together today. But I think this prompts a question on: are there more compelling opportunities emerging in such environments? Are there sectors or business models that you see benefiting from this uncertainty today?
Great point. So sectors are wide, and also I do believe, personally, my view is I'm bullish on the UAE and of course in the region. If you want to talk about UAE specific, who have been very heavily affected by the current conflict, we have always been bullish and respect the UAE leadership. So if I were to bank like a startup founder, UAE country, the leadership team has always been so A plus. So we truly believe that this is going to be short lived. And this is the time to be local and expert and actually go double down on sectors that we thought perhaps were overly hyped. And now we're seeing the lower valuation. We want to go actually triple in. And that can mean let's start with what sectors have been affected the most: tourism, hospitality, events, real estate, and then followed by trade, the commerce, any logistics from sea and the air freight, not on the land, but trade. So these have been affected. I'll give you tangible examples why those sectors who have been impacted actually are giving some good circumstances. Let's say trucker, one of our portfolio companies. Trucker actually is seeing so much demand because of the increased significance on the land freight. There actually have been too much demand by Egypt to Saudi to the UAE. There actually supply constraint. So that is in a good situation to be in. Now, some companies that are affected, of course, we have a prop tech company or the restaurant QR code company. They have been impacted in the UAE, but we also are utilizing this moment to actually clean out our situation, actually refocus on our vision, refocus on the product, so that because the demand will come. Demand will come. It's not that they will never come. So we're using this opportunity to think about product line, product roadmap, any other geography we can expand, be that Saudi, be that outside of the region. For example, we just talked to our AI company called Journeyfy, who want to utilize this time to actually think about how to expand further into the US, further into the Asia. And we as a Shorooq are actively helping them. So let's not be afraid to challenge our boundaries in these drastic times, because drastic times require drastic measures.
That's a good point for all investors that are actually following this live and to the founders hearing this live. A quick comment to drop your questions in the chat. We will come to that within the next 10 minutes and we'll get to answer some of them. So please keep the comment section live. Now, moving a little bit gears here, Shane, I think we've talked about AI. Do you believe, how should investors differentiate between long-term value and short-term hype, particularly in areas like AI and particularly in sectors that actually do better during a crisis, but might not do as well afterwards, right? How do you differentiate? How do you invest in models that you believe can, or at least identify models that you believe can sustain and weather the storms short term and give you value over the next 10, 15 years?
Yes. So look, let me start from very different answers. So, with the current conflict, many sectors that have not been the biggest recipient of the capital are going to be more important. Security, for example, defense, for example, and AI that impacts security, defense, of course, also. These two sectors, if you follow like Magnus report or all the VC startup ecosystem funding, they've never even been top 10. But now we are also getting requested by our LPs and by the top down. Shorooq, what do you guys do in defense? What do you guys do in actually security? And perhaps because I'm also Korean, I know UAE and Korea, for example, have been collaborating a lot on the defense system. So these are big industries. They have always been very big industries. And UAE, actually, whether you believe it or not, is one of the top spenders in the defense globally. But surprisingly, we just didn't see enough startups, enough funding, or enough ecosystem. There's no ecosystem in a private market on these. But I am hoping with the unfortunate events like the current situation, we are going to see birth of amazing founders, amazing capital, and amazing ecosystem in defense, security, and so on. Not so.
Yeah.
Just wanted to highlight that. Now, we are quite bullish on what we call deep tech or defensible mode companies. And frankly, these companies always do show resilience despite on all these. So if there was no competitive edge and you were relying on, let's say, someone else's spending or just a hype, these are the moments where all those hypes kind of disappear and you do need to have a fundamentals or substance to your, let's say, technology. And again, if you don't have that yet, these are the moments to focus and actually build one, again, with AI or without AI. But these are the ways where now with AI, your really cost of production has really substantially decreased. And how can I verify that? Now, Tico, you know this. In the past, when the founder were telling me, Shin, I want to expand to the US, we really had to be thoughtful on the go-to-market strategy and capital fundraising strategy. US was so expensive compared to here, which is still expensive compared to many other parts. But
Sure.
to expand to the US, we needed to raise $50 million. But now, Tico, with AI, that has fundamentally changed, meaning that with AI, global market has been your actually addressable market. I don't need to raise $50 million just to expand to the US anymore. Why? Because my product suite, I can actually develop here and a go to market strategy for the US. As long as you have a vision, and our portfolio companies are doing exactly that. OpenCX founders are from Jordan, based in Jordan, but we have been serving US and Europe clients from the beginning. From the beginning.
Yeah.
I don't
Yeah.
need to serve Saudi, UAE, Jordan customers from the beginning in the past. So now, if you adopt that approach, product first approach, and market is global, then we really can see 10 billion, $20 billion companies from the region. We don't have to be constrained by the market size of the Middle East. And why? That used to be defined by number of population, spending,
Sure.
but now completely changed. So
Mm.
this is actually a very interesting moment that defeats how we started this live podcast was turbulence in the Middle East. But actually, if you think about it, I am targeting global from the first place. Actually, what's happening here is only just happening physically, but actually shouldn't affect us too much because we're a global
Yeah.
company to begin with. And if you further advance that thought, that's what makes US so great. They always target global market from the beginning. So now, if I were to summarize what I'm saying, yes, region is affecting us, but these are the moments with the technology, also with the circumstances, is going to encourage us to go outside of the sweet spot, and we can actually do it, and we can have a strategy around that.
I want to tap into your experience as somebody who's overseeing a multi strategy investment firm, right? And your eyes get to see deals across venture, credit, and late stages as well. From an investor standpoint, how did, if at all, capital allocation shifted across these strategies? Have you seen a strategy that becomes more effective during, let's say, crises like the one we're in today?
Yes.
There were reports a couple of months ago on how private credit and credit has been under a lot of scrutiny. Is this still true in today's environment?
Great points. Let me talk about different funds or platforms slash strategies we have. Let's start with credit because that's a great point. Honestly, in my view, from what I heard, if we didn't have this Middle East conflict sweeping across the news, we probably are going to be hearing far more negative news on private credit from the US. Because so much things are happening actually there, and because we have a private credit strategy, I follow the news there. In the US, so much bad things are happening there. However, in the region, frankly, our let's say maturity of the private credit market is not there yet, and we are far more immune from what's happening in the US. And we, Shorooq, from our private credit platform led by Nathan and Joe, are actually doubling down on private credit. We think best companies in the Middle East who actually cannot get access to equity capital because of what's happening, who never really got too much access to bank capital, these are the moments to lend to strong, solid SMEs or MSMEs and actually help them scale. So
Mm.
our private credit, you're gonna soon see our announcement. I mean, Tico, now that you guys know
Yeah.
it, the audience here is gonna soon see our announcement on our new investment. We're
Yeah.
excited to announce that we are actually seeing huge deal flow on our private credit, and they are
Okay.
good, strong companies. So we are active there. On our early stage fund, to recap to everyone, our early stage fund strategy is we want to invest in the GCC plus Jordan, Egypt, Pakistan from pre-seed up to Series A. And we have always been active, and we are continuing to be active. Yes, we spend a lot of time for Saudi because that's just the largest and the deepest market. And you might have seen our latest investments like CQR, which is cybersecurity deep tech, OpenCX, the AI company, Journify AI company, we also are aggressively investing into UAE, Egypt, all these companies, and nothing has stopped. So no change there.
Mm.
In our pre-IPO fund, that's our latest platform that we just announced to the world. We're closing our first deal already. As soon as we announced it, we're quite confident on that investment, and we are also seeing huge flurry of pre-IPO opportunities that we invest, and we're going to take them either to public or to M&A to global private equity and strategic players. So in short, we're very active. Nothing has changed. But frankly, Shorooq, whenever situations happen like this, we just put our heads down and focus on execution. So that's what we have always done, and we'll continue to do so.
Yeah. I've got a few questions that I want to channel through to you, and then we'll cover a few from the comments section before we call it off. I think it's very clear as investors, you want to, at these moments, you want to be strategically deploying capital, knowing obviously what to look for and what opportunities to look for. But then as founders, I think the narrative becomes, what, one, you've answered the question that investors like us are deploying today. So that did not necessarily stop us. But from a founder's perspective, how should I be thinking about fundraising in today's market? And most importantly, what is the hat investors are putting on today when it comes to valuations, right? What should I be expecting as a founder?
Yes, there's always a tricky question because every company, every sector, but also every founder is different. But I do think it's fair to say you should be conservative on the fundraising, meaning that it's going to be more difficult. And I can talk to you why. If you look at the last few years, our region has been growing fast. Also, due to international capital has been coming into our region. As soon as this happened, I did talk to a lot of them, and this geopolitical risk is a significant risk to most, if not all, international capital, and they have slowed down. So good 30 to 40% of the capital pool, at least for the next 6 months, kind of disappear. So now you need to go to local VCs, family offices, or strategic corporates. And of course, they have slowed down, not because they want to stop, but they just want to get clarity on what's going on. As an
Mm.
investor, I always say uncertainty is our biggest fear. It's not about the bad situation. As long as I'm clear about the bad situation, we're still fine. But what we cannot really take the risk is uncertainty on the outlook. Today is about now 2 months into the war. I was hoping by now we have utmost clarity on the resolution and what's going to happen. But frankly, still now we don't have that. And what's really even more exacerbating is every 2 weeks we're seeing it's going to be delayed by another 2 weeks. So that is really not so good. And for founder, so just understand that investors are they didn't stop, but they just want some clarity. And I'm sure you can understand if you're an investor putting your own capital. But let's say VCs like us who have always been active and we're deploying, I think you just need to really give us the clarity on how the last 2 months have impacted your business and how the next 6 months are going to impact your business and why you think either you're going to be stronger or acknowledge that this has weakened my business, but we're going to be fine because of XYZ. That thoughtful conversation needs to happen. We cannot pretend everything is so fine or perfect because it's not. And we need to, we would respect the founder's maturity that you have thought about this, you have seen it, and how you're going to overcome this. And why do you need Shane or Shorooq to help you with XYZ?
Yeah. Thanks, Shane, for really clarifying a lot of the questions that we've received from the audience prior to this live. I want to move to some of the questions that we've received in the comment section, and we would love to have your take on them. A question from Farhat Bashir, founder and CEO at Serab Technologies. She's saying, "I like to know your take for startups in the UAV domain, unmanned aerial vehicles. Given defense is now a topic, how does the current situation impact their funding? What measure these startups should take if they are raising funds?"
So first, thank you for the question. And personally, I've seen Not too many companies on that field, but we have seen it in the UAE, also in Korea. So I respect and admire the journey because I'm sure it has not been easy. First, I would like to understand, and you are probably thinking about how much capex I need. If your business in that industry is low capex or light capex, probably I can say is the right time or better time at the moment. But if you require significant capex, meaning that significant amount of capital, that has always been, in my view, biggest worry for this industry in the Middle East, because there are not too many investors investing in that segment because of the capex environment. And Shurooq, we have invested in businesses that have huge capex, and it does present a challenge on scale. So capex is related to scale, and related to what we're looking for is we're looking for big outcomes and big scale. And this is what is different from the US and China, where there's just so much capital on every sector and every stage versus here. So in that segment, your best bets are likes of ADIO, likes of TFTF, likes of capital providers who can support you. And you need to prove some kind of idea and a thesis and why this is going to be a huge outcome for a VC like us. And I know this is not the easiest a positive answer you're looking for, but if I were you, I would approach the TFTF, certain capital strategic providers. Look, my industry is becoming more essential and strategic to the country, and you need to support me. Otherwise, I'm not gonna get XYZ capital from the regional VCs, and otherwise, you will never grow this industry, never. And I do think it's very important. We are already seeing the pulse of drone to defense to missile, anti-missiles, AI, cybersecurity, security, and this entire field. We need audacious founders like you and constantly push the boundaries.
Another question from Salim Hassan, who's been a friend to the firm for quite some time. He's asking a very good question. What type of AI opportunities move Shurooq's needle for your AI fund? And I think he's referring to pre-site Shurooq.
Yes. So great question. To everyone's clarification, our pre-site Shurooq AI fund, we target actually investing in the global AI companies, and we have been and will continue to invest from our regional funds, our early stage fund, Bidaya fund, our latest fund, pre-IPO fund, Catalyst fund. They all invest in the let's say regional AI companies. Generally, we look at AI as 4 buckets. There's AI application layer, there's enablement layer, there is a foundation layer, and there's infrastructure layer like data centers. Shurooq, we prefer companies from application layer to foundation layer. Infrastructure, data centers, and etc. Generally, we don't touch it. So if you operate within these 3 buckets, we would love to talk to you. We love AI. Tico, you know this. We spend so much time on it. I personally spend good 12 hours every weekend playing with Claude and etc. just to try. But at the same time, I'm also getting FOMO. I want to be vulnerable and open. The difficulty of AI is every 6 months we get something new. And honestly, it's a wild west there. So what I would like to understand if you're AI founder is how mission critical you are to my life or organization's life, that you're not going to be outdated or replaced. You're only going to be more essential going forward. And if that's the business or sector you are in, we'll love to do more. We have been working with our portfolio founders day and night to be AI native and to integrate AI in everything. Shurooq, we're also coming up with our own agent for each platform. I call Bidaya Fund agent, Nada Fund, which is our credit fund agent, value creation strategy agent, Markham agent. So if your solutions are deeply integrated and mission critical, we are going to work with you. We would love to either invest with you or help you get other clients through us.
Let's take one last question, Shane, and I think that one touches the real world assets thesis. But Roman Harris is asking, how is your current thoughts about RWA projects like Mantra that
Yes.
we've invested in before?
Yes. Great one.
What is our current thesis? What changed? What
Yes.
not?
So first is then it seems like you're very knowledgeable about the space. We all follow what's happening on blockchain, right? The last 6 to 7 months, blockchain industry has been having a difficult times. We can see that from the Bitcoin, at least today, or the last 2 days, it kind of increased back to 73 to 75, but it has been very, very difficult. And when Bitcoin and Ether prices are that low, the entire industry on the blockchain has been kind of suppressed. But quick answer I can give you, we love the thesis on RWA. We're still very bullish on it. We have been finding companies and building positions here and there. And when you see the likes of BlackRock still saying and going double, you're seeing more institutions in the US are actually adopting RWA thesis. And yes, there's again uncertainty on the Clarity Act, Genius Act. There's a lot of things going on there. However, we are bullish and we are looking for technology layer, mid layer, infrastructure layer to enable the RWA. Dubai, Abu Dhabi have been front runners on this, and I believe we continue to be. It is true that with the war with AI, the focus on RWA has been much less, just because there is a larger revolution that we need to be a part of, and we only have limited bandwidth and limited capital to have our positions on everything. So because of that, it seems to be less focused, but we're still bullish. And I believe if you're a great company, right now it's time to come in.
I love that. It's a perfect way to end this. Last words, Shane, as an advice you would give to investors and founders today navigating this environment. What would it be?
Yes. Look, humans, and this also speaks to me and Shorooq, who try our best of the best to be disciplined, right? I say that we're like 10 times a day. These shocks are good reminders for us that at the end, we need to build businesses that are durable and compounding in nature. And if we're focused on a long-term and compounding and durable nature, these challenges are actually good times to double down on our key focus areas. If we had so much, for lack of a better word, extravagant fat in our business, these are the times to read out. And thankfully, we also have revolution like AI coming to us. It is a good time and almost an essential time to really relook at our business and see what is essential and what is not essential. And most of the things that we thought are essential are not essential. So let's read this out and we are going to be stronger. Remember, when COVID first happened, yes, before the tech became boom, we were worried. We were worried. But Middle East turned out to be some of the biggest recipient and growth drivers after the COVID. And I really think that was not luck by coincidence. That was designed by the leadership team, by the hustle we're building. All of us are working. Let's continue to put our heads down and focus on execution, focus on our core priorities, and we will be stronger. We are here to do business. We want to work with you. We are active. We actually want to continue to show strength more from this.
Thank you so much, Shane. That's all we've got for you today. Shane, really thank you for stripping away the noise and giving us a clear-eyed look at what it actually takes to invest when the ground is shifting, I would say. To our audience, the message is clear. Certainty isn't a reason to wait. It's a reason to invest strategically where it really matters. If you missed any parts of this session, the full replay will be available immediately on our LinkedIn and YouTube channels. I will also be sharing a summary of Shane's key takeaways for everyone to read and for them to understand how to invest through volatility on our website. Visit Shorooq.com later this week and you'll find them. Thank you for joining us on our monthly series. We'll be back next month with more real-world playbooks for the regional ecosystem. Until then, keep building, stay resilient, and we'll see you on the next one. Thank you, everyone.
Thank you, guys. Thank you, team.